Welcome to Myanmar Musings, a podcast of the Myanmar Research Centre at the Australian National University, Canberra. I'm Luke Corbin. Today is Tuesday the 3rd of August, and we're bringing you another seminar that was recorded live at the Myanmar Update Conference last month. Today we have Dr. Russell Toth from the University of Sydney in Australia talking on Myanmar's microfinance sector, agriculture, under COVID-19 and the coup, emerging insights and new challenges. This is a really great chat. There's a little bit of microphone interference, but we encourage you to persevere. Russell is introduced by Aung Mo, and his presentation is not followed by a Q&A. There are some great insights in this talk from survey data, and we really hope you enjoy it.
My name is Aung Mo. I am the founder and executive director of Center for Social Integrity.
We'll be moving to our next speaker.
Russell Toth, a senior lecturer in the School of Economics at the University of Sydney. He is a development economist focusing on the microeconomic of the private sector development, and he has been studying issues such as entrepreneurship, microfinance, digitalizing and digital finance, agricultural in the Myanmar economy since 2013. He is a member of Myanmar Economic Associations affiliated with Sydney Southeast Asia Center.
Russell Toth, please take the floor.
Okay, thank you so much. Thank you for the opportunity to present and the organizers at ANU for inviting us in such a vital time for policy in Myanmar. So the focus of my talk will be on the microfinance sector in Myanmar in rural areas, but I'll touch on adjacent issues like microfinance more broadly and the agricultural sector, which will touch on issues like food security. Okay, so just a quick overview. So 70% of the population of Myanmar lives in rural areas in normal times, and I think based on AFCA's talk, that might be even higher now. Agriculture normally represents about a third of the economy and takes about half of the labor force. The success of rural sector and agriculture is critical for employment, food security, and broader well-being in Myanmar. The largest source of financing for farmers in Myanmar in terms of number of clients and actually the amount of lending is the Myanmar Agricultural Development Bank, MADB, which focuses on small and medium holders in the rice sector. It lends in other sectors, but the large majority are small and medium holders in the rice sector. And microfinance institutions have been a growing source of rural finance in the last 10 years. So in this talk, I'll summarize a report that should be out in the next few weeks on these topics. And it kind of follows up a previous report that you can find online from April 2020, which tried to provide early insights on policy responses for rural financing as COVID-19 was emerging in Myanmar. So in this talk, I'll really focus on the events since then, since May 2020, surveying relevant reports and literature with a focus on the microfinance sector in rural areas. And then I'll also at high level report on results based on a number of surveys that were conducted by colleagues at the Myanmar Agricultural Supports Facility that's managed by IFPRI. So they've been conducting a number of surveys. Some of the results that AFCA presented were also related to these surveys. So the surveys cover a number of aspects of the value chain. There was surveys of community leaders and informants in rural areas, agricultural input retailers, agricultural producers, mainly smallholder farmers, rice millers, agricultural traders, and urban food retailers. So I'll mention some high-level results from those surveys and then highlight policy priorities at the end. So just as a quick overview, so since April 2020, as you can imagine, microfinance institutions, MFIs in Myanmar have been operating below capacity, in some cases drastically, especially when there have been lockdowns and then major disruptions since the coup. So lending has largely been determined by loan collections. So as much as MFIs can collect money from money they've lent out, they're able to re-lend, but they have been had a lot of difficulty of getting access to other sources of financing. Policy responses so far have mitigated widespread insolvency. So the large MFIs that represent the vast majority of clients are not on the brink of bankruptcy, but we could see bigger risks emerging under the current circumstances. When I wrote this previous report in April 2020, I was really concerned about a food security crisis. COVID was emerging just as Myanmar was going into the monsoon season, and you had these big disruptions to inputs like credit access. But those worst fears were not realized. There was a drop in agricultural production in 2020, but in overall, certainly there were disruptions in some areas, but overall there weren't massive disruptions at the level I'd feared. But there's definitely more serious concerns now, given the events in the last 5 or 6 months about depressed production in the 2021 monsoon season, leading to even further increases in food insecurity later in the year and next year. Okay, so let me talk briefly about kind of a profile of the microfinance sector in Myanmar. So it's really grown quickly in the last 10 years since there was some policy reforms put in for the sector as Myanmar started opening up. Currently, there's about 200 licensed MFIs operating in the large majority of townships. As of 2019, the sector was serving about 3.4 million borrowers, extending about over $1 billion in credit in 2020. And the density of the sector is at the point where multiple borrowing is becoming an issue in some urban areas. So with people having loans from 2 or 3 or 4 different MFIs. The sector is quite concentrated. So as of 2017, the top 18 MFIs represent over 80% of MFI assets. And there's a handful of MFIs that are supported closely by the UN-managed LIFT fund. And those are really the largest MFIs, representing about 75% of the sector. The LIFT, through the LIFT support, that those MFIs have mainly been financed through international debt in the last few years. And so that's important for thinking about the impacts of kind of the ongoing crises. And in terms of the interest rate in the sector, the current interest rate cap is 28%. It was reduced a couple of years ago, and most MFIs would be lending at that rate. So just to give a visual of the microfinance ecosystem, in the green box, we have microfinance institutions themselves in the middle. In the top right, they're obviously connected to their members. So they're providing loans, collecting repayments. They also hold savings increasingly. So there'll be savings deposits and withdrawals and other services that MFIs might provide. And then MFIs obviously have their staff and suppliers. So they're going to be paying their staff and incurring expenses. In terms of financing, we have the blue boxes. So at the top middle, there's domestic sources of capital. So some of the commercial banks lend to MFI, these are domestic equity sources, so domestic investors. In the top left, we have domestic banks. So some of the domestic banks have been lending to the MFIs, but the biggest source of financing would be in the bottom left, international investors and lenders. And the dotted lines there are just to emphasize where there's government oversight on this kind of financing. And then in the kind of reddish boxes, we have the 2 main regulators. So on the left, there's the central bank, which is also directly regulating the domestic banks and is going to set interest rates and these kind of policies. And then the bottom is the financial regulatory department in the Ministry of Planning, Finance and Industry. So that's the main regulator of MFIs. They're going to be having oversight on the details of MFIs operations, regulating capital flows to MFIs, et cetera. More broadly, if we're thinking about rural financing, the major sources are listed here. So as I said, the MADB is still the largest single lender in terms of number of clients. MADB has branches in about 60% of townships. And there's some interaction between the two. So sometimes, say, if MADB loans come late, microfinance borrowers will use microfinance loans to bridge between when they need money, like for planting crops before the monsoon season, and when they get their MADB loans. There's also a network of cooperatives in Myanmar. Banks aren't a big source of financing for farmers. And in Myanmar, large agribusinesses tend to be net savers with banks. So there isn't a huge amount of borrowing from banks by rural agribusinesses in Myanmar. There is some on-lending through trade credit from large agribusinesses lending upwards in their own value chain, and that may reach farmers, although many value chains in Myanmar are done on spot, and so there isn't a lot of trade credit between buyers and farmers. And then there's the ecosystem of money lenders and informal lenders. So what were the impacts of COVID-19 on the microfinance sector? So there was 4 major disruptions. First, the FRD, as I mentioned, the main regulator, instructed MFIs to basically stop loan collections from the beginning of April to the middle of May. So that was a major time of collecting loans from the kind of the dry season leading into the monsoon season. So that cut back on MFI liquidity, and similar instructions were issued in September 2020 as the second COVID wave was emerging. There were also directives to limit COVID-19 spread. A lot of MFIs were already starting to do this even before they were instructed. So limits on in-person interaction. A lot of MFIs collected their clients' phone numbers and would interact by phone rather than visiting in person. Rules around social distancing, limits on how many people could be at MFI branches. Many wards in rural areas closed to outsiders. So, temporary visitors like an MFI staff member couldn't enter a village, especially during April and May. Then there was the broader shock to the Myanmar economy that's been discussed throughout this event. So, that caused massive disruptions, made it hard for a lot of borrowers to repay loans. It became more difficult to access international debt. So as I said, international debt is really the main source of financing for the microfinance sector in Myanmar. During major crises like COVID, there tends to be what's called in the econ literature a flight to quality. So investors want to send their money to the more developed markets. And then the central bank mandated a reduction in interest rates from 16 to 14% in April and May. And that actually meant that MFIs couldn't pay as much to international lenders, and that actually made it harder for them to access international lending. So what were the major policy responses? The government's COVID-19 relief plan provided some accommodations to MFIs, though anecdotally there was a lot of problems with those programs, and it's not clear how much actually reached the MFIs. As I said, the central bank lowered the policy interest rate, which would have lowered the interest rate on domestic loans to MFIs, but on net, this definitely harmed MFI's ability to access international capital. And the sector was actually lobbying the central bank to be able to pay the higher interest rate so that they could access more capital. The Financial Regulatory Department enforced a lot of the COVID-19 related regulations around operations. They liberalized a rule on debt provisioning. So they allowed for the fact that MFIs were holding a lot of what looked like bad loans on their books, and they made it a bit easier for MFIs to do that. But there was a number of other policy changes that were being lobbied for that weren't approved. What were the main policy responses to aid the microfinance sector? Just continuing from the last slide. So, as I said, some MFIs borrow from domestic banks, and many provided at least 6 months of relief and restructuring on loans. The LIFT fund specifically, again, LIFT works with about 75 or MFIs representing about 75% of assets and clients in the sector. In April 2020, Lyft projected that there would be 180 to 200 million USD shortfall in financing for its partner MFIs. And Lyft was able to leverage about 67 million US through international debt markets, so definitely was not able to cover that estimated gap. Lyft was also involved with UNCDF and the Dana facility in trying to advocate for other regulatory adjustments to make things easier for MFIs. But as I said, most of those policy changes were not approved. International lenders have been very accommodating with allowing MFIs to extend their international debt and not have to repay. But there has been very little new lending. So did COVID-19 cause less lending by MFIs in 2020? Yes, there was probably relatively more severe interruptions in urban than rural areas. From our own community survey, we've documented operational disruptions, especially in April, May 2020, as the first set of lockdowns emerged. In June 2020, the Lyft Fund projected a 60% reduction in lending by its own partner MFIs. Our community and farmer surveys, which were conducted over a number of rounds, reported that lending conditions had greatly improved by September 2020 compared to April, May, June. But due to the second wave of COVID that really started heating up in September and October, that was again greatly reduced by October 2020. I've heard anecdotes of anywhere from 25% lending reductions in larger MFIs to 90% reductions in the smaller MFIs through kind of October, November. And MFIs throughout 2020 and since then have been rationing funds to existing and repeat borrowers and giving out more in terms of enterprise loans than agricultural loans. Most agricultural loans involve giving out money and then only collecting a few months later. And so MFIs prefer enterprise loans, which start repaying almost immediately. So, as a general audience, you might think that MFIs are great and they're going to do humanitarian relief and reach the most vulnerable, but that's not the case. They would be they were greatly limited in the liquidity that they had available to lend, and to the extent that they were lending, it was mostly to top up existing customers. It wasn't to identify the most vulnerable and give them microfinance. As I said, MADB is the largest lender in rural areas. Was MADB lending disrupted in 2020? That was something I was concerned about as COVID emerged, and it seems that not so much. So through the SERP, the MADB provided COVID-19 top-up loans in addition to regular loans. It seems that those were quite successful. In our farmer survey, 80% of farmers reported getting regular MADB loans at some point. 45% reported getting these COVID-19 top-up loans for the monsoon season. So I thought that was quite good. Less than 25% of respondents to our community and farmer surveys report greater delays in MADB loan disbursements relative to what would be the case in a normal year. So overall, I think MADB did pretty well in 2020. Did agricultural enterprises face greater credit constraints? Our farmer survey finds that credit access challenges is increased as the COVID crisis went on, particularly for landless households and women. Informal borrowing was initially the dominant substitute. So people, talking at household level, people would first borrow from family and friends, then start drawing down their own savings. And finally, they turned more and more to money lenders as the year went on. A national survey by the Central Statistics Office that was supported by UNDP found that 40% of households and 50% of poor households had borrowed just to pay for food. In the early months of the crisis, microfinance borrowers tried to avoid taking on more debt, at least from MFIs. So they were preferring interest and principal deferrals rather than refinancing or topping up financing to avoid excessive, at least formal debt commitments. Larger firms were impacted, though, from our surveys. So that covered rice millers, traders, agricultural traders, and input dealers. about 25% of the sample reported being affected. And a relatively large proportion of these kind of medium to large agribusinesses reported receiving government COVID-19 loans when they were eligible. So did this lead to a reduction in agricultural output in 2020? On aggregate, no. Think about order of magnitude of maybe 5%, 5 to 10% reduction in agricultural output overall. Certainly there was heterogeneity, there were certain subsectors that were hit more harshly, but in terms of on the aggregate, it wasn't a massive negative shock to agricultural output. Only about 20% of the farmer respondents reported investing less in agriculture in 2020 due to COVID-19, for example, due to credit access or input access challenges. The Central Statistics Office survey I cited before found that 8% of farmers left land fallow due to COVID-19, and only 4% changed cropping mix due to COVID-19. Has this raised solvency risks for MFIs, risks of MFIs going bankrupt? All things considered, certainly 2020 was a bad year for the microfinance sector, but all things considered, the sector entered 2021 relatively healthy. So combination of policy responses by the government of Myanmar, the donor community, highlighting LIFT, the international lenders, left MFIs that represent the vast majority of borrowers relatively well placed for recovery. Though new injections of financing would have been advisable to stimulate a recovery if that's how things had proceeded in 2021. International lenders are continuing to work with the larger MFIs and be quite flexible, and should continue to do so in the coming months. But some of the small to medium MFIs are probably effectively frozen and at a higher risk of insolvency. So smaller MFIs may be more likely to be equity and than debt finance, so they don't have a deadline to pay back a loan, but their loan books may be effectively largely a write-off at this point. If the situation did improve, the largest MFIs would be in a good position to ramp up new lending again and participate in the recovery. So what's next and what should be done? So just wrapping up. MFIs continue to try to operate prudently, which means a conservative lending policy, largely recycling the funds that they can collect. International lenders should continue to provide debt relief, and all efforts should be made to support the MFIs to maintain solvency and minimal operational integrity, whether through financial channels, technical support, etc. There's growing word of interruptions and confusion around MADB lending in 2021 due to the overall crisis, low trust in government, and the emerging cash crisis. So there's real concerns about a food security crisis emerging later in 2021 and 2022 due to depressed production during the current monsoon season. Also, there's a lot of evidence around disruptions to agricultural input supply chains, higher input prices, et cetera, like for fertilizer is especially a concern. So the highest priority in the short to medium run should be humanitarian relief, starting with the most vulnerable. Thank you.
Okay, thank you so much. With that, please join me thanking our panelists for incredible presentation.